Normally, when it comes to property, okay, a lot of people, they think that there are no Sharia restrictions on investing in property. And probably this is right. When it comes to individual investments into property, there are very few restrictions. Property, a building itself, okay, is a Sharia compliant asset. So if I want to invest in a residential property, if I am buying a property to let, then of course, okay, I'm buying this physical asset. And if I rent it out to someone, what could be the possible Sharia restrictions? Normally, people do not go into these details. However, uh, in Islamic finance, we say that only those properties that have a Sharia compliant usage can be invested in. What we mean by that? So although the property itself is Sharia compliant, if I buy a commercial property and if I want to let this property to an interest-based bank to open its branch, from a Sharia viewpoint, this is not acceptable because in my property, i.e. the property which I own, this would be used for a Sharia repugnant activity. Similarly, I live in UK and here we have pubs. I cannot invest in a property which can be used for sale, purchase, and consumption of alcoholic beverages. So this is what we mean by only those properties that have a Sharia compliant usage can be invested in. Some people ask a question about the properties with mixed usage. So for example, a group of investors, they would like to invest in a shopping mall, or they would like to build a shopping mall. Of course, then they would be letting out shops and outlets and some offices, depending on how tall that shopping mall is. Now, especially in the Western world, a lot of shopping malls, they would have what we call mixed activities. Mixed activities means some activities which are okay from Sharia viewpoint, and there are some other activities which are not okay from a Sharia viewpoint. So what should we do when it comes to the properties with mixed usage? Now, if this is an investment through stocks, and we would come to this point, for example, if it is a REIT fund, then these investments would follow the same Sharia restrictions as in case of listed stocks and public equity, and we will come to that point. If this is an investment, a direct investment, in that case, there are some additional requirements. At the time of acquiring the property may have some non-Sharia or Sharia repugnant activities going on. However, this should be intention of the investors to get rid of those activities. For example, if you buy a shopping mall and there is one conventional bank's branch in that shopping mall, at the time of investing in that property, that activity, i.e. the branch, could be there. However, after acquiring the property, you have to make arrangements to replace that activity, i.e. a bank branch, with a Sharia compliant activity. It could go to an Islamic bank, or if there is no Islamic bank, this could be then let out to another business which fulfills Sharia requirements. The second important thing with reference to property investments is that a Sharia compliant property portfolio cannot be leveraged by using interest based debt. So that's what we mean by leveraging a property portfolio poses Sharia challenges. Leveraging itself is acceptable in Sharia as long as the debt is Sharia compliant. Okay. For example, 100 million property portfolio, 100 million equity in a property portfolio can be complemented with another 100 million of Sharia compliant debt. And that Sharia compliant debt can be in the form of a commodity murabha arrangement, or it could be any other arrangement, excuse me, which fulfills Sharia requirements. Any interest-based debt and leverage based upon it would not be acceptable from a Sharia viewpoint, whether this is property investment or any other investment as well. Now, when we are referring to property investments, okay, there are quite a number of property fund management companies, okay, i.e. they're property investment managers. Now, those property investment managers, okay, they cannot guarantee an upfront fixed return on these investments. If they want to offer a guaranteed return, this should be done through a Sharia compliant structure. One popular structure is that the property investment manager would receive investments from its investors, would buy a property, and then it would rent the property from the portfolio for a fixed return. That fixed return can be passed on to the investors. So this is acceptable. Otherwise, receiving investments, for example, if there are 5 investors, each one of them is investing $1 million, and I am an investment manager, and I tell them that you will be getting 10% return on your investments. Okay, this is not acceptable from Sharia viewpoint if I do this upfront. Okay. However, if the property portfolio I invest in, if it generates 10%, 11%, 15% return, if this is passed on to the investors minus my management fee, that is acceptable from Sharia viewpoint. Now, investing in the stocks of the real estate companies is allowed, okay, subject to Sharia screenings. When we say subject to Sharia screenings, this means there are Sharia screens for investing in listed stocks. Whether these stocks are of tech companies like Apple, or these stocks are of property companies. Normally we call them real estate investment trusts. They will have to fulfill the Sharia screening criteria in order to invest in the stocks of such companies. And there is an increasing number of REITs, Islamic REITs as well. In the city of, in London, for example, there are quite a few companies which offer opportunities to invest in a property portfolio without actually having to buy the properties by the investors. Of course, the investment manager would make arrangements to buy the shares into these companies. So investing in the stocks of the real estate companies is allowed, just like investing in the public equity is acceptable. And of course, as we know, and we will explain this thing towards the end of this IFAP, that this is subject to certain Sharia restrictions.